How do you become a do-it-yourself investor? Welcome to Tea at Taxevity, where you get insights from insiders, our many clients and friends. I'm Pramod Sharma, your actuary at Taxevity. I help people transfer financial risks with life insurance, health insurance, and pensions. Our guest today is Aman Raina. Aman, what do you do when you're not being interviewed?
If I'm not chasing my kids around the house all the time, I spend most of my time working as an investment coach for my company, Sage Investors.
Okay, and that's perfect because we are talking about investing. And in particular, we're talking about do-it-yourself investing. Why would someone want to do their own investing? They're busy chasing kids, etc.
Yes. I think it comes down to where people are in their life and what space they're in. And over my experience, over many years, I've run into cross section of people who have been investing and have started out investing, but just don't seem to be making progress. They've done all the right things. They've set up their RSPs and TFSAs accounts, and they're working with a bank or a financial advisor to get the kind of advice that they need to be on that path to meeting their financial goals. But they're just not making any progress, and it hasn't helped also that over the last 15 years or so, we've gone through three severe stock market corrections or crashes. And so people I find that I've been running to over the years are feeling a little bit disillusioned with the current status quo process of how they've been investing, and are looking for a different kind of relationship and are looking to kind of take control of their financial situation. And that's why you're seeing a growing swell of people that are empowering themselves and willing to go out and invest for themselves and learn the process of how to of making investment decisions.
Okay, so is there a trend towards do-it-yourself investing?
Absolutely. I think technology has played a key role into that. In that, you can simply now go on your phone and make an investment decision, buy or sell a stock. You can go on your computer or your tablet. You can call on the phone. Technology has been quite a big enabler in allowing people to make those kind of decisions on their own. In a sense that function was a very restricted function previously. It was you had a broker and you went with the broker and you called them up and you would make a trade or you would execute an investment decision. But now things have changed quite a bit, and with respect to executing an investment decision, but it's also the research behind it and the resources and the information that are out there to enable you to make a decision are enormous. And the internet has had a lot to do with that.
Okay, so more people are deciding to become do-it-yourself investors. How do they get started?
A lot of it is just waking up and deciding I have to start doing this on my own. And so a lot of times they will go through the traditional avenue of maybe looking for somebody with a professional experience and going through a bank or through a personal financial advisor to do that. But
so do you mean essentially they're looking for another investment advisor?
In some cases they are, but I guess bringing it back to more of a person that would want to start doing it themselves. Mm-hmm. Really, a lot of times people start off is just through education and buying a book, taking a course, reading about it in the newspaper a little bit more about investing, and that's usually the first kind of foray that people want to take on is just learning and immersing themselves with a lot more information. As I said earlier, the reality is now we live in such an information dominated society where you can get we have business media running 24/7. We have mm-hmm. newspapers now that are and online publications that are all about investing and just hitting us with all kinds of investing information. We have blogs, we have Twitter. Social media now is becoming quite an influential factor in terms of getting information out there and enabling us, swaying us into different directions to making decisions. So there's just a mountain of information out there that is available to us to start investing. But the problem is it's a mountain of information.
Yeah, that's the issue I find is that you can read all these things, but sometimes you want to talk to an actual person because you want information that's tailored specifically to your situation. And we don't have all that much time. We've got the kids running around, et cetera.
Right. As much as we want to learn, people go out and branch out becoming a do-it-yourself investor, we're human beings and we still want a connection. We still need a connection with somebody or a group that can kind of anchor us in terms of framing, determining whether, are we making decisions that are consistent with where we want to go? Are we using the right processes and methodologies to make those decisions? And so that's kind of, in a way, how I've evolved in my career, transitioning from an investment analyst to now what I do as an investment coach, which is essentially educating people, enabling people to make better investment decisions through, and one of the factors that I teach, or core competencies that I try to build with people, is how to filter that mountain of information that surrounds us.
When people are getting started, they need to learn. Is there anything else?
Well, one of the first questions I always ask somebody that I potentially could be working with is their level of commitment to the process.
What do you mean by that?
Well, let's be honest here. Investing is a time-consuming process. The concept of understanding and evaluating a company or a stock or a mutual fund is a very time-consuming process. There's a series of steps or questions that you have to ask yourselves to determine whether a stock is worth buying or selling. And it's a time-consuming factor. And so if you're like me with 2 kids that I'm chasing around all the time, you may not have enough time or to devote to the process. And so one of the first questions I always ask is, like, how much time are you willing to commit to the process?
Also, maybe how young are your kids?
Yes, that has a factor too, and and that's okay, because if you do have a lot of time you really want to immerse yourself and really understand the nuances of making better investment decisions. Well, that's good, and there's a track and there's a learning track for that to give you the foundation and the fundamentals to understand that. But if you're like most people that really couldn't be bothered understanding I really don't be the type of person saying, like, I really don't care about the nuances of the stock market, but I know I need to have some exposure to stocks as part of a financial plan to meet my long-term goals. I know I need to be involved in it. Well, then there's a learning path for that, and it's a more passive kind of approach to investing. And I would develop a series of modules that would give you the foundations enough to give you some street smarts to understand it and some basic financial literacy to do that. So commitment is a really key part of when you're starting to be a do-it-yourself investor. You need to ask yourself that question.
So someone has decided to become a do-it-yourself investor. Are there pitfalls that they can face?
Usually when people start investing, especially from a do-it-yourself perspective, the emotions, I ask people, how do they feel when they started that process? And a lot of times it's excited, motivated,
right,
keen, ready to just go and just invest in anything, and the vibe is good. But over time, what happens though is after time and after people maybe buy a few companies or a few stocks, or they invest in a mutual fund or an ETF, and they don't see that kind of performance that they thought they were going to see, then the emotions change a little bit different. So we're going from a happy vibe to a now confused, frustrated, wondering, okay, what did I do wrong? I followed all the steps. I thought I made a decent decision, and people get confused. And that's really the point where emotions can start coming into play and then taking you down a path that could make things worse. And a lot of times, the big thing that bogs us down as when we make investment decisions is the behavioral side and the emotional side. And because every one of us, even Buffett, are in conflict with various biases that can cloud our judgment.
Yeah, can you give us an example or two of biases?
Well, a classic one and the biggest one is kind of the herd mentality, as a herd or groupthink mentality. As humans, as people, we naturally want to associate ourselves with people that are, the winning team. We want to be part of the winning company or the winning game or winning team, and that's and that a lot of times we'll see, like, if Apple, I'll just throw a company out there. Apple's doing you hear all these things about Apple, people lining up around the block to buy the phones and stuff. And you think, oh wow, I got to own that stock because everybody's buying it. Well, a lot of times when you get into that group mentality, herd mentality, that's usually the worst time to be making a decision on buying or selling that stock kind of company, because then you're making a decision more on an emotional basis than really looking at the fundamentals of the business. And a lot of times that the herd mentality or that groupthink, adopting a groupthink mentality or behavior, following the trends or following what's hot, what's in, is usually a recipe to lead you down or not exactly a great path with in terms of a successful investment outcome.
In your business, do you sell any investments, or are you simply providing education?
That's the great thing I like about what I do is I don't sell any products. What I sell is my time in education. I spend a great deal of my time teaching people about investing, about about the mechanics of how do you go about investing.
Okay, so you don't have any conflicts then?
No, so I don't. As I said, I don't sell any products. I don't sell any like mutual funds or insurance or anything like that. I'm not associated or affiliated with a financial company. It's me. It's me. It's my company. And so when I talk about things and investment concepts and things, I can talk about it freely, and I'm honest with people. And that's what I like about being what I do is I can be honest and transparent with people and what I think in terms of where they're going and what the decisions that they're facing.
In the financial sector, that's refreshing to hear.
Yes.
What's your key message for the people watching?
Key thing about with respect to going out and being an investor, it's about education, educating yourself, not about everything about all the, you don't have to go out and get a PhD in finance or an MBA to be a really great investor. You just need to understand some basic principles of how capitalism works and some basic principles of how a company works and operates. You get that side of it down. The other side that's also important, and it's a competency, it's really important to put you over the top, which I think is the secret sauce, is the understanding and being aware of your own behaviors and your own biases that can cloud your judgment. And if you can combine those two elements together, the probabilities of you being a better investor are, I think, much better.
What's the best way for people to reach you?
If they want to learn a little bit more about investment coaching and the whole process, they can go to my website. It's www.sageinvestors.ca. I have a whole bunch of information on what an investment coach is and what they do, that process. And also, I'm on social media also quite a bit, so you can follow me on Twitter on @sageinvestors. And usually I'm on there commenting and my observations and my thought processes on my own investment decisions. And I also put all my investment decisions on Twitter. I tweet them out in real time.
Thanks very much for dropping by.
Thank you. Thanks for having me.